Even if they are only experiencing temporary unemployment, individuals frequently find themselves in a position where they require financial aid due to the ever-changing environment of personal finance. Being able to obtain a loan without having a work can be a difficult task, since traditional lenders often want a consistent income in order to reduce the likelihood of defaulting on the loan. On the other hand, these individuals who are navigating the financial system in the United Kingdom during periods of unemployment have access to alternate possibilities. A number of obstacles stand in the way of prospective borrowers in the United Kingdom who are attempting to secure a loan without having a job. The job status and income of an applicant are often the key considerations that traditional lenders, such as banks and credit unions, take into account when determining whether or not to approve a loan application. There's a possibility that the lack of a secure job could be interpreted as a big risk, which makes it possible for many conventional lenders to completely refuse loan applications. There are other options available to those who are looking for loans but do not have a job, despite the difficulties that they face. It is essential to investigate a variety of choices and get an understanding of the terms and conditions that are linked with each one. All of the following are some possible alternatives. Personal loans with a guarantor. Applying for a personal loan with the assistance of a guarantor is one of the options available to you. A co-signer who agrees to accept responsibility for the loan in the event that the borrower defaults on the loan is known as a guarantor. It is possible to considerably improve one's chances of being approved for a loan by having a guarantor who has a consistent income and a positive credit history. Secured loans. Loans that are secured require the borrower to provide collateral, which can be a valued asset, like a car or property, for example, in order to secure the loan. The risk that the lender is exposed to is decreased as a result, which increases the likelihood that they will grant the loan. It is essential, however, to be aware that the loss of the asset that was pledged as collateral for a secured loan can occur if the loan is not repaid. Peer-to-peer lending. Platforms that facilitate peer-to-peer lending bring together individual investors and borrowers in a direct connection. It is common for these platforms to have eligibility requirements that are more flexible than those of traditional lenders. Peer-to-peer lenders may take into account various aspects of the borrower's financial condition, like their credit history and general financial situation, in addition to income, which is still a factor. Credit unions. There are several credit unions that, in comparison to commercial banks, may provide more lenient terms concerning loans. The primary objective of credit unions, which are financial institutions that are owned by their members, is to provide service to their members rather than to maximize profits. There are some credit unions that may take into consideration other kinds of income and have loan requirements that are more individualized. Government assistance programs. Individuals who are experiencing unemployment or other economic issues may be eligible for financial aid from the government through certain assistance programs in certain circumstances. In spite of the fact that these programs might not provide conventional loans, they might be of great assistance in offering short stress alleviation. Loan apps in the UK. The proliferation of financial technology, FinTech, in recent years has resulted in the development of loan applications that are tailored to meeting the needs of individuals with a wide range of financial profiles. Some of these applications offer more flexible lending criteria, despite the fact that they were not intended expressly for those who are currently without jobs. The terms and interest rates that are linked with these applications may vary, and prospective borrowers should carefully research the facts before committing to any financial agreement. It is crucial to remember that different apps may have different terms and interest rates. The following are 2 loan applications available in the United Kingdom. Number 1. QuickQuid. Cashironet UK LLC is the company that runs QuickQuid, which is a provider of short-term loans in the United Kingdom. QuickQuid may take into consideration applications from persons who have a variety of employment situations, despite the fact that it is essential to exercise caution when dealing with short-term loans due to the high interest rates that they carry. It is important for borrowers to thoroughly analyze the terms and conditions of the loan and make sure they are able to fulfill the requirements for repayment. Number 2. Sunny Loans. Another company that offers short-term loans and is based in the United Kingdom is called Sunny Loans. In a manner analogous to that of QuickQuid, Sunny Loans may take into consideration applications from individuals who are in several work situations. It is important for prospective borrowers to have a complete understanding of the terms of the loan, including the interest rates and the repayment schedules, before moving forward with the process. It is important for individuals to give serious consideration to the following aspects before applying for any loan, particularly when they are unemployed. Repayment capacity. Consider whether or not you are able to repay the loan. You should take into consideration your whole financial condition, which should include any additional sources of income, savings, or support from family and friends members. Interest rates and fees. Take careful note of the interest rates as well as any fees that may be associated with them. When it comes to loans with shorter terms, in particular, the interest rates are typically higher, which can result in significant expenses if the loan is not repaid in a timely manner. Loan terms. Take the time to familiarize yourself with the loan's terms and conditions, including the repayment plan and any penalties that may be imposed for late payments. In order to avoid any surprises further down the road, it is vital to have a clear grasp of the phrases. Alternative income sources. Although it is possible that you do not have a typical employment, you should think about other potential sources of income, such as working as a freelancer, receiving benefits from the government, or earning money from investments. During the application procedure, these factors could be taken into consideration by certain lenders. Credit history. Having a good credit history can increase the likelihood that you will be approved for a loan. The correctness of your credit report should be checked on a regular basis, and if necessary, you should take measures to improve your credit score. Although it may be difficult, it is not impossible to obtain a loan in the United Kingdom if you do not have a job. A number of essential elements in the process include investigating alternative lending choices, gaining an awareness of the risks that are involved with them, and carefully analyzing the terms and conditions of potential loans. In addition, folks who are experiencing temporary unemployment may have extra options available to them if they make use of the services offered by loan applications that are designed to accommodate a wide variety of financial profiles. However, in order to avoid experiencing financial difficulty in the long run, it is vital for borrowers to exercise prudence, prioritize responsible borrowing, and have a sound repayment plan in place.